everybody. This is Toni Turner, and welcome to the Market Now as of Thursday, December 2nd at the market's close. Now, yes, I know I'm a day early this week, but bear with me. This is the only time I could do it. I hope you all had a really great Thanksgiving. Well, Wall Street bounced back with a broad rally today, recovering ground lost in the previous session's steep sell-off as investors snapped up bargains while digesting the implications of a morphing pandemic. The Omicron variant has spooked markets for about a week now, hitting travel-related stocks particularly hard as a patchwork of new restrictions were enacted around the globe. Today, however, the major indexes are moving higher. So on that good news, at least, we will go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the ETF that closely follows our benchmark S&P 500 index. Now, the SPY's last all-time closing high, see if you can see this little candle in here, that was the SPY's last all-time closing high, not intraday high, but closing high. And that was on November 18th at $469.73, or about $46.97 on the S&P 500 itself. So closing highs are important, as you can imagine, because that shows commitment. If you stay through the market on closing each night, and especially on Friday, that shows commitment. So when I captured this chart this afternoon, and this was actually when the market closed today, the SPY was trading down here at $457.40. That's about 3% off of the all-time high that we just talked about. So as we look here, when the Omicron was started being talked about, the market fell for the last few days, at least this week. It fell down to this low here yesterday, Wednesday, and that was at $450.29. And as you also see, that is on or just below the 50-day moving average, which is the green line you see here. And the 50-day came in, or is now coming in, at $453 and change. We always want, if possible, we want our indexes and our stocks that we're long to stay above their 50-day moving average. It's a medium time frame, kind of a trend. Well, they're very definitely a trend indicator. So, and it's an important one that's watched by a lot of institutional traders. So while the SPY did close below the 50-day moving average yesterday, Wednesday, it did manage to hold those lows this morning, didn't go below them, and rose up to close above the 50-day moving average today. And note the volume down here. It's really spiked in the last 5 days of trading. So, of course, we have to see what tomorrow will bring. But notice all of the action here. Of course, we think of it as selling when the candle is big and red and goes down like this, and of course some buying as it moves up. So now we have resistance here up at these highs up here at 469.73. So we can call our resistance here up here at 470. We'll just call resistance at 470. Then we can look down. We see the 20-day moving average was, of course, price fell through that. We have support here at 453 where the 50-day moving average is. Then we have more support down here. Now note with me that this support here down here from September, those September lows come in at 426. But we can also see the 200-day moving average coming here at 429. So that makes this point here, 426 to 429, that makes that potentially a strong support area. And we know that since that is true, should price come down to this area, and we do not want it to fall below, because this is a matrix of 2 points here, which means with price support and with indicator support, that means it's a pretty strong area. And of course, that would also mean if price can fall through it, then price is weaker, certainly, than we want it to be. So, and we don't want that price support broken. So, on with that, it will count, of course, the governments in some, Congress is in somewhat of a flurry right now. There's a deadline coming up with that. We'll have to see what happens with that and what's said about Omicron in the next few days. But this reversal candle here was a good thing. Now let's hope that at least 450 holds for now on the S&P 500 spider. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. As you all know, this represents the Nasdaq 100, a very major index in the market. Top holdings, of course, include Apple, Amazon, Microsoft, Alphabet, Facebook, that whole group. Now, the QQQ made its all-time closing high on November the 19th at $403.99. Today, when I captured this chart, the Qs was down to, or the cubes as we sometimes call it, it was down to closing at $389.91. And that is 3% below these highs up here. Now, if I look at this chart, I mean, I just can't miss it, and I don't want this to happen. I don't want this to happen, but I have to talk about it because some of you all are going to see it too. There is a potential, very small, but certainly maybe visible head and shoulders here. And there's different ways we can put a neckline. I'd be tempted to you can put the neckline across here. If you put it lower, it's not going to count yet. So some of you are going to say, do you see the head and shoulders? Yes, I do. What is a head and shoulders? For those of you who don't know, it's a top reversal pattern. Does that mean the QQQ is going to go lower? No, not necessarily, but it's a very shallow one indeed. And it's only about, let's see, 10, 12 points from the high right now of the head down to what may be this neckline here. And I'm saying maybe because we haven't seen how this is playing out yet, how the Nasdaq is going to do, say, in the next week. We can't tell if it's really a neckline and it's being broken. Sometimes, once in a while, head and shoulders patterns can actually be continuation patterns. So we have to give it a few more days to play out. But anyway, it's there for those of you who see it. And it's a very shallow one. That's the good news. Now, we do see support coming in here at $380.56 at the 50-day moving average. Of course, price is below the 20-day, the red line moving average. So we do now have resistance up here. We're going to call it 404. Support is down here at the 50-day, potential support we're going to call it, is down here at the 50-day moving average, again at $380.56. Then if we look a little lower, we can come down here and see potential support in this area, about 365, and then on down to September lows at 353. Now, once again here, the September lows comes in, 353 comes in exactly with the 200-day moving average. So we've got, one, just like with the SPY, price support and indicator support. So that should say that this is a pretty strong area should the QQQ need it, need that support. Of course, it's far enough away right now that the 200-day moving average and the 200-day moving average and price support, of course, that will deviate in a little while depending on price pattern. But at least for now, that we've got all of these potential support areas in place. So we will have to see, as we will with everything in the coming week, if the QQQ can maintain, especially if it can stay above the 50-day moving average. That would be very good news. If it can't do that, then we need to maybe get a little more conservative, maybe take some profits, and maybe hold some dry powder to see what will happen in the future. And please remember, stocks move in cycles. They do not move in straight lines, higher or lower. And many people these days have never been through a market that plunges pretty dramatically. So, and certainly I'm not hoping for that, but a lot of people are not familiar with that. So just trade wisely. Please keep your stops in. Our final chart today is a daily chart of the Spiders S&P Home Builders ETF, the XHB. It has 35 holdings, including Builders First Choice, Home Depot, Lowe's, Masco, D.R. Horton, the home builder, and Lennar, the home builder. Now, the XHB just made, and everybody's talking about real estate in this country, I'm sure in most arenas by now. Home prices have skyrocketed, and builders are building new communities, certainly all over the country, as fast as they can go, given the supply shortages and the staffing shortages. So the XHB made a new all-time closing high on November 22nd at $84.03. That's this little candle right here. So that's the all-time closing high for the XHB. Now, when I captured this chart, the XHB was trading and closed at $82.88, just back above its 20-day moving average. So if we look back here in the chart, we can see it was trading up higher here around 80. Oh my goodness, we don't have the months on this chart, do we? Okay, so back here earlier in the year, it was trading at about $80. Then it moved down to 69 and change, and this was in July right here. This was July of this year, obviously. Then it moved back up in August and September, and it moved back up to about 71. Then it fell back down here, and note how it caught the 200-day moving average and in September, and it made a slightly higher low than it did before. That's always bullish when you see something make a higher low, at least for the time being. That is a bullish move here. So and that was in September. So ever since September, the XHB has been moving up in a very, very nice, I don't know if I can draw a straight line here. Been moving up in a very, very nice, slow and conservative, which I like, and steady uptrend. Now you can see it just recently moved above its 70 line on the RSI, and I warned everybody about that on the indexes too. I said it's gotten overdone. When it moves over 70, it's overbought, and something's going to happen, and it did. It moved back down. Now we found support here at 80 for the XHB. It needed to come down and get some of the air taken out of it. So I'm going to keep an eye on the XHB. As you can see, it has price support here at potential price support at 80. And again, it closed today at $82.88. It does have quite a bit of volume coming into it. So if in the coming week the XHB can stay above 79, I will add a small position to my trading portfolio, and I'm going to put my initial stop in down here at $77.50, just below the 50-day moving average. Now, when and if the XHB rises up above, and I want it above that high there, so when and if it rises above $85.50, I will add to my position, and of course by then I will have a trailing stop. So you may want to keep an eye on the XHB in the coming week. And now, please know that this is the perfect time to check out my online training programs. These programs include our flagship trader training, 7 Steps to Successful Trading. We also, very popular, is how to swing trade successfully, how to trade the trend for profits, 3 winning setups, that's always a good one, bottom fishing, down here, and we have many more. So please know these programs can help you increase your gains quickly and easily, and they are low priced. To see all of my online training programs, simply go to the link on this screen up here, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.